Hello traders, this is Brian from FinancialTradingJournal.com. Today is November 2nd, 2013, and welcome back to this week's FX Weekly Analysis. So here are the major headlines for this week. On Monday we have RBA interest rate decision, which will affect the Aussie dollar. Tuesday we will have the New Zealand employment data, which is an indirect correlation with Aussie dollar. Both of them usually move in sync, considering geographically speaking they're right beside each other. On Wednesday we have Australian employment data, which is a direct correlation to Aussie dollar. Thursday we have BOE interest rate decision, which will affect the pound dollar. ECB interest rate decision, which will affect the euro dollar. And lastly, on Friday we have Canadian and US employment data coming out. Canadian will affect the dollar CAD, while US employment data will affect all US dollar pairs. So that's it for the headlines. Let's get started with the analysis. First up we have dollar CAD as usual. Monthly chart, we closed a green candle, so that's great. That shows consolidation in the short term. However, we did bounce off of a short-term downward trend line, which will be more clear on the weekly and daily chart. But for now, on the monthly chart, you can see it as a red line. We bounced off of that, and it looks like we're heading towards the magenta trend line. So let's take a look at the weekly chart. So as you can see, this is the red downward trend line that I was referring to. We had a high, lower high, and this is the lower high. I mentioned last week that we could either form a lower high and go down, or we could form higher highs and break the old highs to target the lines up there, but doesn't look like that's the case. As it stands right now, it looks like price may be heading back towards the magenta line to find further support before bouncing back up to break the highs. As for the daily chart, as you can see, we have an immediate support level right now. This is outlined by the yellow rectangle. This was the high over there, and we currently are hovering right at that price as of the market close. So moving into next week, we're looking to see if price will bounce off of this and retarget highs, or if it breaks support and heads towards the magenta trend line below. So that's it for the dollar CAD. I've decided to stop analyzing the 4-hour charts. I found them useless for the most part, and I don't think because every time I get to the 4-hour chart, I pretty much have nothing to say. Most of the major things only happen on the weekly and daily. Monthly is for long-term stuff, but 4 hours pretty much useless unless you're trading intraday for the most part for Forex. But on the website, you can still see the charts for 4 hours, but in the video, I will no longer be analyzing the 4-hour chart. So moving on, the next pair we have is the Aussie dollar. Aussie dollar, just continuation of last week, we bounced off of the 975 level, which was near the 50% fib level. Continue moving down for most of that week that it moved down off of the 575, and this week as well, continued moving down. Not really much of a pullback. And currently we are closing the month below the 38.2 fib level. So that's a good sign for bears. However, given that the monthly chart kind of resembles a pin bar, do not be surprised if we pull back in this month for the beginning couple weeks, pull back up to the possible 97 or 975 level for a possible double top scenario. That could happen, or it could get stopped earlier at the 96 level as possible resistance as well. So that's all I have to say for the monthly chart. So that's just long-term stuff. Weekly chart, as you can see, we are well into a bear move now. Last week I mentioned we had this red candle, which resembled kind of like a pin bar, but not really, considering the body is the same size as the wick. This week we had a continuation red candle. The only thing I don't like about this red candle is that it did not close below the open of this green candle. Notice how both of these red candles pretty much are the same size as this one green candle. Ideally, I would have liked this red candle to be way below here, somewhere over here, and that would signify a further bear move to come. But given that it didn't do that yet, there's a possibility of a retrace, so do not be surprised if we do retrace. However, on a daily chart, we did break the daily trend line, so that is also a good sign for bears as well. In the short term, based on daily chart, we broke the trend line, but long term, based on the monthly and weekly chart, do not be surprised if we pull back to either A, retest the highs here for a double top, or to retrace the trend line. So if you were to extend the trend line, for example, it would go up to here, and if price were to move back up to here, this would be a test of the trend line and the double top for potential a bigger move downwards. So that's it for the Aussie dollar. Up next we have the euro dollar. Euro dollar, interesting things to note. Monthly chart, last month we have a pin bar, and this is effectively a really good pin bar. Small body, long upper wick. That's the shooting star candlestick. And this month so far, although we've only had 1 day of trading so far, November 1st, which was yesterday, it dropped about 100 pips so far, I believe. The open was around 36 and it dropped down and the market closes at 3485, so that's about 100 pips ish. So that's it for the monthly chart. So just keep in mind that we have a pin bar, and most pin bar formations, kind of like similar to the Aussie dollar pin bars, do not be surprised if we pull back. Usually the best way to trade pin bars is retrace 50% of the wick and then you enter for a lower risk entry, and then you continue playing it in the appropriate direction, which is in this case down. But given that we have ECB rate change decision this week, that will be the biggest factor for determining directionality for long-term euro dollar. But the US employment data will also affect things as well, because that will ultimately affect taper announcements. So keep that in mind for the long term. Weekly chart, we are currently stopped at a support level. You'll notice that I have several trend lines drawn. This is the old upward trend line there. I added this black one here as well for further targets if we break these ones in the short term. And we also have this short one here, which is from these tops here and the bottoms here, which also is where the support level is, because you'll notice we consolidated in this area for quite a while in the past month. Because in September, after the surprise FOMC announcement of no taper, this green candle sent it back up to here. We never fully retraced it, unlike all the other pairs, which they did, like pound dollar retraced it, Aussie dollar retraced it, dollar CAD retraced it, but euro dollar did not retrace it. And then after we bounced up to there, we consolidated in this region for quite a few weeks before bouncing up over the past several weeks. And then this week we dropped considerably, and as I mentioned last week, I was holding a short position on euro dollar, which was pretty much near the top, and I pretty much caught about 300 pips of this drop, which was about a 350 pips total, but I only caught 300 of it. I exited near 3.5. I didn't think it would keep dropping throughout the US afternoon yesterday, but it did. But anyways, on the weekly chart, I have a theory for potential pullback or retrace. And on the daily, I have another theory as well. Technical point of view, if you look at this region over here, notice there's a green candle and then a big red candle, similar to how we had it here. This was, you had 1, 2 green candles, 1, 2 green candles, 1 big red candle, 1 big red candle. And notice, if you go from the top to the bottom of the red here, that's about a 360 pip move. Doing the same thing over here, this is also about a 360, 350 pip move. The next candle was a doji, but this is more of a gravestone doji slash pin bar. But this one went back up about 160 pips. 160 pips from here is around the 365 area. Now, the 365 area, so just keep that in mind when we switch to the daily chart. So short term, right now, based on the weekly charts, we have this trend line holding it up. We have this support area here for consolidation. We also have this red trend line for potential bounce as well. If it breaks all of these, we will be targeting the black trend line here. And then when we break that, we'll be targeting ultimately the magenta area down here. And then if we break that, then obviously down here, these targets are in play as well. But that's a long way away. We're talking 2 or 3 months down the road. So that's long term. But keep in mind the 365 area. On the daily chart, what we could be forming is a potential head and shoulder if it bounces here. You'll notice this is the left shoulder right here. This is the head. The 365 is right around here, which is in line with this high over here. This is the 3646 area, which is around the 365 area. This is the left shoulder. If we bounce up, we could be forming the right shoulder right here, which would coincide with the 365 area, as I mentioned, with the possible retrace based on the other theory on the weekly chart. And this would be the right shoulder, and if that completes, and then breaking this neckline over here would continue moving it down. However, it has to bounce. So all of these things on the long-term weekly chart has to hold for price to bounce in the short term. But ultimately speaking though, technical analysis goes right out the door because fundamental analysis will wipe it out. For example, the ECB rate change or the US employment data. Those two could drastically change the direction. So just keep that in mind moving forwards. But 365 is the area to watch going into this week of trading for the potential right shoulder and the potential retrace to continue moving down. And that's where I'm looking to enter as well, because I already exited my positions. I already caught 300 pips. 300 pips in a week is pretty damn good if you ask me. Also, one last thing to note, although I didn't draw fibs, if you think about it though, it's supposed to move up about 160 pips. 160 pips relative to a 350 pip drop is around the 50% mark. So if I did draw fibs, that would be around the 50% fib level as well. So just keep that in mind. That 50% fib level, possible right shoulder, possible retrace based on historical technical analysis, and that is at the 365 area. So watch that area this week. So that's it for the euro dollar. Lastly, we have the pound dollar. Pound dollar monthly chart, as you can see, last month's candle closed green and it closed below the magenta trend line. Previously I mentioned if we had closed above it, then we would target the black trend line and then target the upper areas above. Doesn't look like that's the case, considering we dropped about 300 pips from the high so far of 1.625 to here. That's about 325 pips, give or take. And currently, based on how the monthly chart is shaping up right now, we have broken below the upward sloping monthly trend line as well. So that could be signaling that we are continuing to move downwards towards the magenta trend line down here, which from here would be about a 1300 pip move, which is a big move. But this will have to happen over a month or two, considering we consolidated here for quite a while. So we'll see what happens in the coming months. Now on the weekly chart, what we have right now is immediate short-term support in the 1.588 area, which we bounced off of a couple weeks ago, and we also broke this area after the FOMC announcement in September of no taper. That was what caused the initial swing up when that announcement came out. So in order for price to go down from this point onwards, it has to break the 1.588 area, and that is a pretty big support for most bulls. If that area does break, then we will be targeting lower regions. But on the daily chart, we have two immediate short-term supports as well. First level of interest is the 575 area, which is right here. This is that top there, the top here, which we broke, and then that should become support on the way back down. If we break the 588, which is a major one, this is the next one, and then below that we have the next major one, which is in the low 1.54 area, which is where we bounce off of here. So that pretty much concludes it for pound dollar. So going into this week, watch the 1.588 area, and then if it breaks that, the 575 area, and then the low 54 area. So that's it for this week's FX Weekly Analysis. Hope you guys enjoyed it, and tune in next week for next week's FX Weekly Analysis.